Good afternoon, everybody. Welcome to this week. And boy, sure, what a week it's been. Holy cow. Um, yeah, we've got had a lot of news. Had a lot of news this week. We had a lot of stuff happening both sides of the border. We got a packed news day for sure. Oh boy, it's also our first weekend of the fall. So autumn is officially here, rolled in on Saturday. So how's it how's it treating you? Are the leaves coming down in your area? So far, at least the one tree that I look at all the time, it's still got some green in it, but things are changing. Things are changing for sure. All right, I do want to point out one small little format change. So as we've been getting very, very busy in the chats now, if you've got a question that you want me to address, throw a QQQ in front of it. So I'm going to look for those because when we get busy, I'm going to skip over like general comments. So if it's a general comment that's not really directed at me, I'll skip those when it gets busy. I'll still hit a lot of them though. You know, just that's just the way it is. But anyway, it's going to be a great show. We got lots to talk about for sure, and let's get started. Let's get the news going right away with our top story. So, rate cuts. I've been saying they're coming, and we, not just me, but everybody and their dog pretty much was predicting a 25 basis point cut for the Bank of Canada and the U.S. Fed. Well, the Bank of Canada, they did do that. On Wednesday, they cut their overnight rate, so their policy rate, by 25 basis points, bringing it down to 2.50%. It didn't take long for us to get that little Wealth Simple email after that to let us know that their rates have gone, how much they're going to pay you in their checking. I guess they call it a checking now. That went down as well. So this is the first cut in 6 months, and it's the lowest policy rate we've had in about 3 years. So not too shabby, not too shabby. Of course, on the very same day, Papa Powell was down there, and they cut the federal funds rate by 25 basis points as well, bringing their target range to 4 to 4.25%. And this, for the U.S. Fed, this is their first rate cut since, December of 2024. It's been, 9 months. It's been 9 months. You could have created a human in that amount of time. So that's what they have done. So they both acted. Both central banks cited weakening or cooling labor markets as a major factor as to why they've decided to go ahead with these rate cuts. In Canada, employment, of course, has declined recently. If you guys remember the last time we mentioned it, it was up to 7.1%. In the U.S., job gains have slowed, and some of the metrics as well down there are showing labor conditioning softening quite a bit. So definitely the right time for a rate cut. Now, inflation, that of course is that other element, and it does remain elevated on both sides of the border, but the pressure is easing a wee bit. Growth concerns are, they're starting to tip that balance. So for Canada, inflation was about 1.9% in August. We're going to talk about that. I got another news story on the CPI. We'll talk a little bit about that in more detail in a bit. In August, and core inflation coming in around 2.4 to 3%. So the Bank of Canada does see less upside risk to inflation, and that's kind of helped them finally take a stand and make a move. In the U.S., when it comes to inflation, their PCE, so their personal consumer expenditure, so that's that key one that they really like to look at. It remains quite a bit above the target, but the Fed judges the risk to employment have risen, and inflation pressures are expected to moderate. So external trade issues features more heavily in, of course, the Canadian story, tariffs, of course. They are definitely weighing on our exports, and trade uncertainty is feeding into a little bit of investment weakness. So all of that fun stuff. So what Well, where do we go from here? Where do we go from here? So both central banks did signal that there is the possibility of more rate cuts this year, depending on, of course, how the economic data decides to evolve. So in Canada, the Bank of Canada said it's prepared to cut again if risks rise. And in the U.S., the Fed's projections they include two more additional cuts later in 2025. So we could see two more. I will bet we'll only. I bet we'll only see one in Canada. That's what I'm betting right now, but I could be wrong on that. But I'm thinking one in Canada, two in the U.S. And now, even though we've had these cuts, keep in mind, guys, rate cuts do take time to filter through to the real economy. It'll take us a little bit of time to see what the actual effects on these are going to be. Now, in Canada, I will point out, when we got our rate cut, the loonie did weaken a little bit. Basically, the reason it weakened a little bit is that they felt that the Bank of Canada's tone as investors were thinking it was a little bit more dovish than the Fed's. And so they didn't like that completely. Well, they completely didn't like that. So what are the implications of these rate cuts? Well, it could mean, of course, some slightly cheaper borrowing, variable rate mortgages, business loans, all of that fun stuff through fixed rate borrowing. Now, the fixed rate borrowing probably is not going to move immediately. Now, of course, pressure easing in price growth, especially for imported goods, could bring inflation closer to targets, but risks still remain. And tariffs are still they've still got a song to sing, those tariffs, unfortunately. Now, the cuts are meant to provide relief, help household spending, support business investment, ease the stress from trade shocks. But if labor markets weaken too much, that could, of course, slow some of the growth further. It's going to be fun. I think that's what it's going to really boil down to. And, well, there's always still concerns about whether we diverge from what the U.S. is doing. And we've already done that. We've already done that when we continued cutting when they didn't. So I don't think that's much of a factor. So rate cuts for everyone. You gotta love it. You gotta love it. Okay, guys, let's hit the chat. Let's dip my feet in the chat and say hello to everybody, like Cowboy and Ron. Very anxious to get the show going. Gursky in there with a happy hello Sunday. We got Mark saying happy Sunday. Lots of leaves following in Kingston. Yikes. Yeah, there's going to be, everybody's going to get their share of raking in for sure. King of Day, hello, happy Sunday. Decently nice weather here in Calgary. Nice. It looks nice. I haven't been outside today. I've been pretty busy. Today I was scripting. Today's a scripting day, so I've been scripting pretty much almost up until we started the live stream. So, but it's a blue sky. It's definitely a blue sky. Now, some of you may be in Toronto, because today in Toronto, Blossom is having one of their big meets. I know JJ is there, so pretty cool. And of course, those of you who have not yet heard, JJ is starting a YouTube channel. So he is starting a YouTube channel. I will. I don't have the link on me. I'll get the link later and drop it. I'll drop it in the chat a little later, guys. MC is in the house with a hello, everyone. And we got Rory. Hey there. Nice in Saskatchewan, too. Nice. Zamair. I hope your government spends more time making your life better than to virtue signaling in the Middle East policy. Yeah, I don't know. Paul says, good afternoon. A few leaves on the ground in BC Lower Mainland. And Brian is here with a good afternoon, everyone. Let's see. Cowboy, the lower rate will not help the job market or food prices. It's probably not. Right now, food's out of control price-wise. I don't see that getting any better. And the job market, yeah, this is not going to help those. It's going to help. It will help some people. It will definitely help with a little bit of lower rates here and there. But overall, the impact I don't think is going to be that good. Like right now, we're just starting, like even a lot of the damage from the tariffs, they're starting to filter into the economy now. and we haven't even seen it the full force yet. So I think there's still a lot of pain to come. This is kind of like putting a band-aid. It might be like putting a band-aid on a big gushing wound. We probably need stitches. Tim is in the house with a hola. Hello there, Tim. Vineet is in the house. Hi, all. Hey, Vineet. Have not seen you in a while. Tim says only ranking in I want to do is money. Okay. I like it. Kelly says Bank of Canada has another announcement December 10th. My mortgage renewal is December 8th, though, so I might as well suck it up and find out what they're offering. Yeah, so when it comes to, and let me see, I get this all down right here somewhere. Here it is. So no, we got two more meetings. October 29th is the next meeting, and then December 10th. So there are two more meetings left. So we'll have to see. Will we get a pause on the 29th and maybe a cut on the 10th? Perhaps. So it could be very interesting. But yeah, we are looking at two more meetings left. All right. And I think it's the same for the U.S. So if they're signaling two more, it looks like the U.S. is going to be cutting the rest of the year if that, of course, comes to a pass. So we'll have to see. We'll have to see on that one. Gursky says 26 degrees and sunny here. Nice. Sunny and warm in Vancouver, according to Tim. Kelly, they might give you a stepladder to get in your coffin. Oh, dear. Maybe on the October 29th one, because that would definitely tie in with Halloween. Gursky says these rate cuts should keep the bulls happy. Maybe. We'll see. We did see what I was predicting. If you guys remember last weekend, I was saying once the rate cuts were out of the way, we should have green. We should have a green the rest of the week, and that's exactly what we got. So I like that. Brian says, I think Canada is going to be hammered by Trump, and Kuzma will be decimated now that the Liberals have just recognized Hamas as a reward for terrorism. Oh, gosh. Yeah, Kuzma's going to be, I think it's going to be a cluster and then the F word. It's going to be one of those. But actually, interestingly enough, guys, the next story. Oh my God, are we getting into story number 2 already? This might be a first. But since you mentioned Kuzma, we got a Canada-Mexico story. So what the heck happened? So the Prime Minister, he met with the Mexican president. Her name is Claudia Sheinbaum. I probably mispronounced it. I'm sure I have. But they had a meeting down in Mexico City, and they actually signed a strategic comprehensive partnership on Thursday. So that's kind of interesting. So the pact itself, it's focusing on, and this is kind of one of these goals, a deepening two-way trade and investment in energy, critical minerals, agriculture, ports, rail, and as well our energy corridors. So this marks the first standalone Canadian prime ministerial visit to Mexico in nearly 8 years. So it's pretty significant. And why are we doing this? Well, of course, it always circles back to who? Donald Trump, of course. We got all of those tariffs, the 50% on steel and aluminum, 25% on autos, 35% on most non-USMCA goods, other than a couple of exceptions like potash, and oil, gas. There's also significant hikes on Canadian softwood, and I've heard that that's not over. There may be more coming in that area as well. So what's going on, though, with this is that both leaders, Canada and Mexico, they kind of want to show a little bit of unity as that 2026 scheduled review of USMCA is approaching. That is, I believe it's July. Now, according to business leaders, they're saying that the urgency comes directly from Trump's return and the whole idea of U.S. protectionism. So what are they doing? What are they doing? I think they just want to sort of show a united front. So Carney and Scheinbaum, they're insisting they're not going to let the Trump administration divide Canada and Mexico in trade talks. But at the same time, there is a little bit of mistrust towards Canada when it comes to Mexico. So basically, 2018, Canada accused Mexico of throwing it under the bus during Trump's last renegotiation. So, there's a little bit of bad blood there, but Carney is trying to get that sweeping the bad blood under the rug, I guess. Try to get things a little bit on the better side. Now, obviously, there are strategic priorities here. So Canada wants to keep Mexico close to avoid isolation in those U.S. talks. And in fact, Trade Minister Dominic LeBon is going to be heading to Mexico with a business mission and nearly $10 million for UN-led projects on migrant immigration and fentanyl trafficking prevention. Oh, I need the coffee here. Now, Mexico, one of their goals here is they want recognition as a top-tier economic partner. Scheinbaum, she stressed a three-country deal is the best thing for all three countries. I agree. I think we definitely need a three-way with the U.S. and Mexico. And there needs to be a business push. So major Canadian CEOs, basically representation from Scotiabank, CPKC, TC Energy, ATCO, Martin Rea, they all joined Carney basically to press for some new opportunities. Obviously, some of the trust issues, that's going to be one of the hurdles that we have to get over. And I think we're going to. I think that's going to be pretty well fine. The other big risk, of course, is the Trump factor. The U.S. Ambassador Pete Hoekstra said Trump wanted a bigger deal than just USMCA renewal, possibly including defense, energy, and auto. So we'll have to see how that's all going to roll out. Now, Carney did say that a bigger deal is not currently on the table, but, he hasn't ruled it out as a long-term thing that could happen. Now, Mexico, this is a bit of a win for them. Just the optics of a Canadian PM dedicating 24 hours solely to them sort of carries a whole bunch of symbolic weight. So there's definitely some interesting things coming out of this for sure. And right now, what are the whole implications of this whole thing? Well, for Canada, this is viewed as a hedge against U.S. pressure. Building more Mexican ties makes it harder for Trump to isolate Canada when it comes to, trade fights. And for Mexico, once again, it strengthens their international credibility as a partner beyond the U.S. And for businesses, this is going to open opportunities in critical minerals, infrastructure, agriculture, and energy. So areas Trump may, of course, target when it comes to those U.S. negotiations. So let's see how that all rolls out. All right, back to the chat. All right. Bad joke. Okay. Let's see. Hey, all. Let's see. Maybe you have some thoughts on this. My U.S. broker charges ridiculous rates on Canadian dollar margin and for some reason demands 75% maintenance on all Canadian holdings when it's 25% on U.S. ones. Yikes. That sounds bad. I don't have a lot of experience with U.S. brokers, so I'm going to admit that right off the top. And guys, I should be big screen. I don't have a lot of experience with that, so I don't know if you could shop around, see if you could get a better deal with another broker. I don't know who you're using. Maybe Robinhood. Robinhood sounds like they might be more of a no frills, but I would look around, see if you can get a better deal. Because that sounds, if they're charging 25%, even the 25% on, so I'm assuming, and Zamair, correct me if I'm wrong, but I'm assuming your maintenance is kind of like similar to brokers that we have here that have commissions, perhaps. So I'm assuming 75% they're charging you on a Canadian trade. And that to me sounds really high. So I'm not 100% sure what exactly that is, but if you don't like those rates, I would certainly look around. Cowboy, maybe a budget would help the situation. Yes, and I believe early November they set a date for the budget. I can't remember the exact date. It didn't make my news. It didn't make my news. Rory, I'm doing maybe 3 buys in a week or so. XEI, XEQT, and ZDV for the non-covered calls. Okay. Interesting. Any suggestions for a Canadian brokerage that non-Canadian can open an account with? Oh, gosh. Once again, Zamir, I don't know. If anybody does know, please throw that into chat. I don't know a lot about that. It's probably something I need to look into more on. But yeah, I really don't know. Now, Tim says check with National Bank. I would do that. I am with National Bank, but I don't know about that aspect, but I would certainly check with them. They do tend to be, in my opinion, one of the better of the big six when it comes to their brokerage. Paul says looking at the 3 main cryptos looking how the 3 main cryptos are doing in September. So Solana up 20%, Bitcoin up 6.6%, and Ethereum up 4%. Nice. Nice. Let's see. Zamir says the Mexican president is the only Jewish head of state outside of Israel. Oh, I did not know she was Jewish. Way to go, I guess. Tim Blunt says uranium, H-U-R-A. Good old uranium. Yeah, I am very bullish on uranium, and I think there's a couple of things. Like, I think going into the next 10 years, some of the commodities to watch, gold's always good. So I'm not going to name them. So if I don't say gold, it doesn't mean I'm down on gold. But copper, uranium, I think those two are going to really, really shine. It's which one will do the best, though? That's a good question. If I had to bet, I would probably bet on uranium, but I do like both. And there is an attempt at a link. Yeah, that's... I don't think it'll let you link. I think you have to be a mod to link, Brian. So, yeah, unfortunately... well, it's not unfortunately. I know with a lot of chats like this, if you had... if you let people link in them, you get a lot of robots that'll come in and start linking some naughty sites. So, that's, yeah, one of those things. Cowboy says, Carney wants a Mexican passport in his collection. I don't know about that, but still no videos up. Yeah, it's like, JJ, get us a video. Get us a video. It's hard for me to promote you, buddy, if you don't get anything up. But yeah, let's see here. King of Day. Let's see. With the myth around September being mostly a negative month, the opposite is likely going to happen this September. Well, it's already well. Like, I mean, let's whoops. Oh boy. All right, let's head over here. There we go. And we'll load this up here, and that's Nvidia. Let's go to the TSX here. I mean, look at this. So this is September. So you'll see this blue line, guys. Now, those of you who go to the market close, who attend that, you'll know what that is. This is where we ended last month. So that's where we ended on August. And this is what September has done. Look at this. I mean, oh, banana bread. Look at Friday. That's just incredible. So yeah, we are well above this line. In fact, guys, there's a good chance the TSX could hit 30,000 this week coming up. A very good chance. And this is yeah, this is definitely the opposite of what I would call a negative September. We're just kind of on this nice big trajectory to the upside for sure. All right, Remy, let's see. All right, let's. All right, I got my first QQQ. Hi all. Do you think Trump could block PC Canadian Pacific Railroad from going into the U.S. to get to Mexico? No, I don't think he would do that. The thing is, right now, I mean, you got to look at it. Well, CP, we got rail We got contiguous rail actually from Canada, the U.S., and into Mexico. A lot of companies in the U.S. will use that rail as well, moving U.S. products into Mexico. So there's no reason for Trump to start blocking things like that. Yeah, they're really. I can't see any concerns at all about that at all. All right. Zamir says it's around 10% interest on the Canadian dollar and 75% margin means if the Canadian holding drops 25%, I get a margin call on it. Ooh, yikes. Yeah. And I got that part. I got that part. Yeah, it's kind of one of these things where I don't know how it works in the U.S., so I don't really have that information. Unfortunately, but I know I would. I mean, if you're looking to try to I would look at other brokers, see if there's any other options for you. Yeah. All right. Oh, Paul is bringing in, let's see, I think 75% maintenance means a stock can only fall 25% before a margin call. Okay. Yeah, and that's the other aspect, right? Like I know a little bit about margin in Canada, but I know very little about it in the United States and how it works down there. So yeah, that's interesting. Rory says if Trump blocks CP, he'll block CN. Pipelines never ending. It's not going to happen. It's not going to. I mean, Trump makes some interesting moves, but this is the type of move that would hurt the U.S. big time as well. It's like sort of shooting yourself in the foot. So I don't think it's a concern. I don't think it's a concern. Tim says 0 fees on trades at National. Exactly. Yeah. I don't know if they offer. And I don't know if they do or not. Yeah. Let's see. Which would you choose between QQQI and QQQT? Oh boy. Good question. Let's take a look. Let's take a look here. Let's grab. Let's take a look here. QQQI. So here we go. So this is the NEOS NASDAQ 100 High Income ETF. All right. All right, go away, Mr. Guy. I don't know who you are. All right, let's see here. So let me take a look here. Okay, this is definitely high yield, so we must be using at the bare minimum. We got to have some cover calls going on here. 13.479%. I want to take a gander here and take a look here. All right, now I'm going to duplicate the tab. And let's pull up the other one here. So your other one here is QQQT. All right, let's pull that one up. So this is the Evolve NASDAQ Technology Index. Or you're talking about the Defiance. I have a feeling you're not talking about the Evolve one. I think you're talking about this one because we're US to US. I'm thinking this is the one. So the Defiance NASDAQ Income Target ETF. I think this is what you're looking at. Let's pull this one up here too. And let's take a gander. Not a lot. Oh yeah, look at that. A little bit of difference here. So this one seems to be recovering a little bit faster since Liberation Day. I can definitely say that. Now, let's take a look at these yields. 13.47 or 48 if you round it up. And what is this one here? 20. Oh, look at this, guys. Just going to pull this over here for a second. All right, so this one. Yeah. So yeah, this one here, it seems to be rebounding a little higher. It has the lower yield of the two. So this one is the 13. So what we're seeing a little bit is I have a feeling that this one here is losing a little more upside potential. Bigger yields. There's a trade-off. There's a trade-off when it comes to growth. And we're definitely seeing it on this one. So between the two, it depends on your goals. If your goal is straight up income, it looks like they're both doing the same thing. They're both doing covered calls. I don't know if there's any leverage involved in this because I've never really looked at these two funds. Yeah, I got daily call spreads on the index. So, okay, interesting. So, yeah, daily. So, you get covered calls, or it mentions spread. So, I don't know if they're doing like covered calls as well as buying options to sort of help mitigate some of that loss. But I think between the two, depending on your goal, and this is once again your goal. If your goal is straight up income, obviously the one that has a bigger yield is going to give you more income. But I would, of course, I always like to come back to total return, right? Like, what am I giving up for that income? If this one is giving up more total return, so that would be your income as well as the value, I would be, I would be a little bit more hesitant, and I would probably look at Rami. I would chart them both, do some math on them, figure out which one has the better total return, and I'll tell you, my gut says it's probably going to be this one. So the QQQI, and it just seems that it is picking up some of that. It is picking up some of the movement to the upside, and as well, it's still giving you a really good dividend. So if I had to choose, without doing due diligence, which I never would do, but if I had to, I would go with QQQI under those circumstances. But do the math. Do the math to be sure, because I have not done the math. I'm just eyeballing it. I'm eyeballing it. And whenever you eyeball, have a little bit of a grain of salt. A grain of salt. We got JJ, who is at the Blossom event right now. Awesome, awesome. I'm hoping the Blossom event is going well. That's for sure. So okay, now I got it. I gotta give JJ's thing here. All right, let me see here. Actually, you know what? It is on the Discord. It's on the Discord, guys. I'm gonna go grab that link over here on the Discord. Actually, where did he put it? He put it in the general stock shot. He's not supposed to put it there. He's supposed to put it in the and I'll drop the link here in the chat. He is supposed to drop it in the, and any of you who have a YouTube channel, if you want to drop it in here, we got a random, what is it called? Self-promotion. We got a self-promotion in here. You can drop your the links to your stuff, as long as it's, I mean, if you have a fans only page, don't drop that link in. But yeah, if you've got a typical website, I don't even care. Like, if it's not a finance, if you got a YouTube channel that celebrates flags, you can drop it in. Anyway, let me drop that link in here. All right, guys, the link is there. So that's JJ's page. He has not put a video up yet, but if you want to check it out, head over, drop him a sub. I'm sure he'll appreciate it. All right, Zamair. Let's see, why not hold both? And that's always another option as well, for sure. All right, I'm gonna skip all of this other political type or whatever stuff we're gonna call it. Let's see. Rami says Zamair, because they hold the same stocks, I don't want too much overlap. Okay, fair enough. September has been good. Last 30 days, I'm up 7.17%. Big things for me also are big greens. I was like, I read things for some reason. I'm thinking, what big things? Well, what's going on for Tim? But big greens. All right, got it. Roy says all big six railroads are integrated with each other. Yeah, and there's like a lot of big ones. Union Pacific, that one there that's the one that sticks out. Like, I love Union Pacific. But yeah, no, they're all interconnected. They work well together. Cowboy says the railroads own the right of way. It's private property. All right. And Zamair says Rami, but different strategies, better hold both. All right, let's see. The railroads also swap power and trackage rights. CP does it with CN and BC. Oh yeah, absolutely. Let's see. I am tempted, but if tech goes wrong, it would be ruined. IKBR is international broker. That's interesting, and that's actually the one that Zamair is using. Really? Huh. I would maybe look at some of the others. You know what? you know the person to talk to. I don't know if he's in the house. Larry might have some recommendations because you know he's got his fingers in a little bit of everything. Um, the problem with my QQQ thing, right? I thought this was a question at first, and then I realized, oh no, it's QQQI. That's fine though. I welcome the confusion. I welcome the confusion. And yeah, exactly what Tim is saying. They do look to have performed better over time. And here we go. Look at this. Tim may have ran a little bit of the math for you. So yeah, QQQI year to date 14.77, QQQT 13. So that does say something to me for sure. Let's see. They pretty much track identically, but QQQI has a better gain. All right. Thanks, Candace. You are a true total growth investor. Well, it always, I mean, to me, it doesn't matter if you're an income investor or if you are a dividend growth investor or a hybrid. Quite literally, the end result, like total return, should be a factor when you're calculating things. Because, if you had, like, for example, if you had a really great dividend, but you were losing a lot of value to the point that, everything that you were going backwards, your total return, like if it's a 12% dividend, but your total return is 5%, there's something wrong with that fund. I mean, sure, it's nice to have that income, but could you perhaps get that income from a company that's not moving backwards? So you're still getting a better total return. And that to me is always definitely important, for sure. And it actually reminds me, Adriano. So you guys know we did that live stream not that long ago. He did release a video on NAV erosion, about, when did he release it? I think he released it. It was either yesterday or Friday. It's not a bad video. It's not a bad video at all. I would check it out. I would check it out if you're going on about NAV erosion, because I know I had some questions, and I was saying, somebody was saying, could you make a video on NAV erosion? Well, Adriano has. It's not a bad video. I would check it out, guys. All right. Let's see here. Paul says QQQI has 2% more total return. QQQT gives out more distributions than total return. Yeah, and that is the thing. I mean, it's always a trade-off how it's going to work, but that's why total return, it's taking both into account, and that to me is always really important. But once again, and let's take a look. So we're not going to look back at them again, and I'll go big screen for this. So if your main function, if your main goal is that income, so perhaps you're living off of that, off of your income stream from your cover call ETFs. So when you look at that and you're like, okay, well, I am losing a little bit of total return on QQQT. I'm losing about 2%. So, in comparison to QQQIs, but I'm getting more income. If that's more important to you, that may be a trade-off that you're willing to accept. And there's nothing wrong with that. There's nothing wrong with that. And that's one of the things. Sometimes when you're an income investor, you may make a trade-off. Like, very well that, yeah, I could invest in this other fund, has a better return, but I am going to be cutting back my actual dividend stream. And that may not be, especially if you're in retirement and you're living off those dividends, well, that may not be a good move for you in that situation. So sometimes, yeah, it can make sense sometimes to go the other way, to take something that has a smaller total return but has that higher income, if that is something you need. But that's where, assessing your individual needs, what the portfolio needs to do for you, that is where it's going to determine which way you should lean in a case like this. So you asked me which one I would do. Well, I tend to be more of a hybrid investor myself. So I still fall back on the total return every time. But I can tell you, there's people in here who would be like, no, don't go the total return, get the income. And that's fine. And there's nothing wrong with that. All right. Rami saying, yes, I'm thinking of the bad times as well. Yeah, absolutely. And that's one of those advantages, right? And we looked at it the other day on the whiteboard. During a bear market, if you are not using, if you're getting your income from selling stocks instead of covered calls or income stocks, you could run into a situation where you're being forced to sell because you need that income at a loss. And that never feels good. That never feels good. All right, let's see. Paul says total return has to be more than distribution yield to avoid NAV erosion. Yeah, absolutely. And keep in mind, and this is a point Adriano made, and this is a good point. So the point is that erosion means it's going away. But the reality is you can track every single penny. Like when you do the breakdown, you can see where everything is going. And it's not that, nothing is just disappearing. It's going somewhere. So in some cases, it's money that's coming back to you as return of capital, as part of that dividend. Other times, it's the share price. If the underlying asset's dropping in value, then it's going to drop as well. So that's kind of that thing. Now, one of the things where you can magnify, of course, some of your losses, of course, is leverage. And that's why, a little bit of leverage is okay. But if you get too deep into leverage, it can really, 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 really hurt you. All right. Cowboy says, hey, JJ, don't do live streams at the same time as Candace. Yeah, JJ. If you're still here, don't do live streams the same time. You could do you could sit on the sidelines and you could do the after show. Everybody will just come over and come over to you after I've finished my 2.5 hours or so with them. Tim says, going QQQQI. I think there's an extra Q in there. That's okay. I like Qs. I don't think you'll go wrong over time, regardless of market fluctuations. All right. Neos tries to avoid NAV erosion. Absolutely. Hey, we got Mary in the house. Mary is our official captain of the like button. So, guys, if you haven't hit the like button yet, do it now. I'm going to have some coffee, so you got nothing better to do for the next 11.28 seconds. So good. So good. Brian says, good afternoon, Mary. You reminded me to hit the like button. You see, Mary doesn't even have to say anything. She just says hello. And that, then there's that means hit the like button. I love it. I love it. Jackie. Jackie is in here. Candace, thank you for not giving the political bashing platform here. I follow you for financial discussions, not political zealots. Yeah, so guys, and this is one of these things. I'm really clamping down on the political speech. So, if you guys can talk amongst yourself, unless something gets really, unless something starts to get really out of hand. Then I'll step in on that matter. But I'm not going to talk on the air about, I'm not going to go down any rabbit holes unless it's related to either one of our news stories or, I will. I'm still going to get pulled down some rabbit holes. Let's be honest, but I'm going to be very selective. I'm very selective for sure. So yeah, we're going to try to keep all of that under control, especially as we're growing, and we got a lot more people. Like when we used to have 30 people, yeah, it was a lot easier. But now we got, like right now we're sitting at about 70 people. So yeah, it's kind of important to keep the talk flowing in a friendly for everybody way. Paul says the people in the U.S. seem to have less access to Canadian stocks than Canadians to U.S. stocks. Yeah. Now, there is a big reason for that. Obviously, the big reason is that the U.S. market is the largest in the world. And we want access to that market. We need access to that market. I love the Canadian market, but, when the biggest companies in the world, especially on the blue chip side, are in the United States, that's one of the reasons. It'll always be that way, for sure. Let's see here. Rory says Adriano swears NAV erosion is a myth, but when you look at strategy and yield max with yields north of 50%, insane. Yeah, there are some insane. There's some stuff out there. Like I don't know. I don't know if I would call NAV erosion a myth. I think it's overblown. I think it's also. I think people. I think the name is probably not the best. Like they probably should have named it something a little bit different than NAV erosion. I would call it. Let's call it shrinkage. I like it. Don't put your stocks in a pool. They might experience some shrinkage. That makes. Of course, right now all I can hear in the back of my head is that Seinfeld episode about shrinkage. A hilarious episode for sure. Tim says lost value buying into strategy. MSTE. When I started do it yourself investing. Yeah, I mean, this is one of these things. Like one of the reasons I love HHIS. I love it because it has, it's got a basket of all of these stocks, and that gives us some amount of diversification in there. And that's one of the things. You could be an income investor, and you can still be concerned about diversification. There's a lot of income investors who don't. They're just like, I want the big yields. I don't care where they're coming from. Well, that can get dangerous, especially if you start to really over diversify into one stock. Like imagine if you went 100% in back in the day in MSTE. Well, oh boy, that's going to be a roller coaster ride for sure. And hopefully you can hold on and you make it out green in the end. But oh man, that would be, it wouldn't be fun. So yeah, diversification, I think it's huge. I think even doesn't matter what type of investor you are, I think diversification is your friend. Cowboy, have you gone to many of the new ETFs? So Biggie, HHIC. So HHIC, I do have some exposure to that. I've not yet touched Biggie or Carney, the other one from Evolve, but the month is still. We're only halfway through the month, but I don't know if I'm going to touch them, but I'm going to look at them absolutely. Biggie and Carney, I find them interesting, but right now it's like, when you've got the competition, right? When somebody comes out with a really good product and everybody starts copying it, it doesn't mean that you have to have a bit of everyone. You can if you want. I mean, that is diversification, right? But there's no need to sort of jump ship from one to another each time a new ETF comes up. And let's face it, guys, ETFs right now are growing in Canada faster than they've ever grown in the past. And there's going to be lots of new ETFs coming up, new concepts, new strategies, new ways to make money. So, we talked a bit about BMO and that gold one that has a covered call spread. If that works, you're going to start seeing everybody else dropping covered call spread ETFs. So there's, it's going to get more and more crowded. And that's that thing. So when things get crowded, you don't want to run and jump on every single ship. Find the ones, look at the ones that are working for you now and perhaps stay with them instead of sort of jumping on every single new. Give some of the new things a chance to breathe. See if they are all that in a bag of chips before you do it. Because, there's going to be more coming. There are more coming for sure. Zamir, there are Canadian stocks on the New York Stock Exchange. Oh, there are. Scotiabank is there, TD is there, Enbridge is there, a whole bunch. Fortis is there. All right, let's see. I don't know what that is. All right, oops, gonna skip over. Gonna skip over any of the interesting talks. All right, let's move over here. Let's skip that one too. All right. Guys, you're making it more difficult. That's fine. So yes, it is massive hit. All right, Brian, let's see. Oh, guys. All right. right now. No more talk about Jewish people or any of that. Let's just cut it. Let's just cut it, please. All right. And guys, let's see, typo QQQI. All right. All right. Ron says for buying MDALF is the US dollar version but has very low volume. Would it likely not reflect the full Canadian value when I attempt to buy with US funds? That's a good question. So okay, so you want to buy. Let me just see. Would it likely not reflect the full Canadian value? Um, I don't know. I don't know, Ron. That's yeah. I honestly don't know. If anybody has any idea on that one, please drop some info for Ron because I couldn't tell you. I couldn't tell you. All right. All right. Let's see here. All right. Let's see here. Billions of dollars being destroyed by. Oh, guys. All right, guys. I am going to start. I am going to start banning people if the talk doesn't get back to finance. I will start banning some folks just to let you know. Just to let you know. You've been warned. This is the only warning I'm giving. I'm not much of a warner. I'm more of an action person. Let's just say. All right. All right, let's just see here. I'm going to skip ahead a bit here to try to get past some of the stuff. All right. Paul says, Tim, have not lost anything from Palantir, but strategy is down because, MST is down because strategy is down. Absolutely. That is true. That is true for sure. I mean, strategy is one of those companies that its moves are very, very interesting for sure. Obviously, if we get another big run up of Bitcoin, I think we will. I think it is coming. That will certainly should get you back into the green. Should give strategy a bit of a pump. Should also, of course, filter through to MSTE. But it sounds to me though, Tim, that if this roller coaster ride that is strategy, and it is, it's a highly volatile. That's the reason you have such a high dividend yield on that. If it's going to drive you crazy, once you get back on the green, you might want to get out of that one. I keep talking about HHIS. Nice, easy way to go. Just a thought. Tim says, just dump Palantir when it came back up temporarily. I bought at its peak, then it swan dived. It was Tim. Okay, it was Tim then. I was trying to remember the other day who had got in on Palantir at the high. I'm happy about that. I'm happy about that for sure. That's definitely glad to see that you got out at the green. I still think, though, Tim, I do think it's still going to go a little higher, but it's never a wrong thing to take a profit. Kelly says HHIS seems okay so far. I do like it. Rory says HYLD is the only cover call ETF I have thus far. Yield is, it's just under 15%. What is it? 14 point something. Let's see. Yes, I have some HYLD so far. So good. All right. There we go. All right. Oh, we got a QQQ. This is what I want to see, guys. I want to see the QQQs. All right. At the time with the market high such as they are, would you say it's a good time to drop underperformers to get on with some more promising stocks that are moving at the same or some cover call ETF? Okay, this is a beautiful question. So I always talk about when everybody is running. So if all the stocks are running and you got that stock in your portfolio that's just sitting there, it's not doing a thing. Now, there's many different reasons why it might not be doing a thing. Perhaps it's getting ready to run. Maybe. Or maybe it's just kind of, I don't know, just a sector that isn't doing very well for whatever reason. So I would look at that as a couple of things. One, if I want to make money, and we all do, I might consider doing a sideways movement. So a sideways is basically where you sell it and you pick somebody else who is at least moving, who's going to basically get back what you are sitting in the red on that one faster than what you would get if you just sort of hold it out. That's one option. And if you are holding it in non-registered, that is also an opportunity for tax loss harvesting. So you sell that, move it to a side, do a sideways trade on it. Then you can claim the capital losses on your taxes. Fantastic. You save some money. So that's always a good thing. But what I will come down to, so for example, right now, if I'm holding, and here's the thing, if you're doing a sideways, right, you almost, is the other one not moving too? If the other one's not moving too, it's not going to help. So a lot of times you want to look at something that is moving, that you might be able to ride some profit out on, which is fantastic. It's fine. But the other thing too is you want to also look at what that sector is doing. Because for example, if it is a REIT, so let's say right now you're holding a REIT, that REIT's kind of down a little bit. Well, we just had a rate cut. We're probably, we may get another rate cut, either October or December. If that's the case, once these filter in, it's going to be good for both utilities and REITs. So there might be some movement to come on that. At the same time, you also have to look at the bigger picture. So in regards to REITs, with some of the housing issues that are going on right now too, that is impacting REITs. So when we put the limits on foreign students, for example, that impacted the REITs. Back in September, we saw a lot of, September of last year, we saw a lot of movement down as the Liberals sort of tightened, made a little bit of a tightening on their opening up of immigration. That certainly had, it killed the last train to the moon, the moonshot. It killed it. I mean, we were doing fantastic and we went down, and you can see this. Actually, you know what? Let's look at, oops, we don't want to look at Discord. All right, I'll pull up my good old buddy RMAX. I like RMAX. All right, so this here is the Hamilton REITs Yield Maximizer. This is a covered call. They got leverage. They got the works. But they really show, I'm going to pull the 3 here. They kind of show what was going on. So they launched right here, and this was basically at the same time the rate cuts began. And the excitement of the rate cuts and the rate cuts themselves, because the rate cuts continued for quite a bit, drove them up. And then right here, this is where a lot of the changes to, for example, foreign workers, foreign students, all of that came into effect. And then, yeah, they plummeted. So they came right back down to earth. And then we had Liberation Day. Oh, boy. But they've been slowly building their way back up, because now the negative stimulus is pretty much gone. I mean, we still have the same limits, but we've adapted to it. Now we've got more rate cuts. And because on this one, and this is the reason I chose RMAX. RMAX holds 50% US REITs and 50% Canadian REITs. So as we got rate cuts on both sides, we got a positive stimulus on both sides of the border. We can look at this starting to go up a little bit. So that's something that you're going to see. So if this was, let's say this was the stock that you were holding, chances are it's probably going to start another movement up. And also with this here, you are getting a half decent dividend too. This one here has like a 9.781% yield. So that's not too shabby. All right. So yeah, it's kind of going back to, have some more coffee here. Going back to the question, it is okay to do it, but just make sure that one, you know what's happening with the stock that you're in, and that, you're not like, you don't want to sell it on, and then all of a sudden it blows up the next day and starts going back up, and you're like, oh my God, I just got out. It can happen, but as long as, if you do your homework on it, you usually have a good chance of that not happening. And then just make sure as well that you're moving into a good, fundamentally sound company. And also keep in mind too, sometimes the size of the investment will help. Because obviously if it's a large investment, you're going to do a lot more studying on it, and maybe you're not even going to move all of it out. You might just move a little bit out, sort of, I don't want to say a trial run, but you may not move all of it in a case like that. So that's just something to keep in mind. So there's a whole bunch of factors that come in, but yeah, it is okay to do it. Just as long as you do your homework and make sure that you're paying attention to what you're doing. All right. Tim says, let's see here. Strategy Palantir, too volatile for me? Yeah, absolutely. And there's nothing wrong with that, right? If something is too volatile for you, that's perfectly fine because we all have our own risk profiles. There are stocks, like for example, for me, I'm afraid of a lot of those yield max ones. So I've dabbled, but I won't get in deep. For me, they're going to be more of a quick strategic, if anything. But yeah, I know there's some of you who love the yield max. Love like your ULTY or some of the single stocks, the synthetic covered calls as well. For me, they're a little outside my risk profile, and I'm okay, and I'm willing to admit it too. I'm like, yeah, they're too risky for me. I'm a wuss when it comes to those ones. All right, let's see. Rory, you have to admit, Question Period in the House of Commons is more entertaining than Netflix at times. Oh yeah, I like Question Period for sure. I'm glad to see Polyev back, and and I will. And the only thing I will say, and this is me getting sucked into a political rabbit hole, but it's going to be a short one. It's going to be a short one. Is that in that initial conversation, so in the initial House of Commons stuff between him and Polyev, and Carney, the fact that Carney is not a lifetime politician really shone. So he's got he was a little bit awkward, but he'll get better. And that's all I'm going to say. That's our rabbit hole right there. Paul says, but Tim, volatility gives the income on Palantir. All right. Let's see here. Tim Blunt says, if there's other funds to gain income and have some upside. So for me, I moved to safer funds. Doing much better so far. I don't like seeing red. Yeah, absolutely. I mean, and that's the thing. There are very good covered call funds out there. Like if you're looking for income, there's great, like HDIV. There's an example. Like, look, guys, let me pull this up. HDIV is a perfect example of a very nice covered call to hold. And let's just pull them up here. So look here. You can see, well, here's Liberation Day. But I mean, since Liberation Day, look at this. This is you're getting a lot of growth. You're also getting down here, let's see here, 10% yield. So 10.38%. This is one of my favorites currently. It's just doing fantastic, and it's been doing this for a while. So HDIV, yeah, HYLD also doing pretty good. HDIV I think is outperforming big time. So Larry's in the house, but not with some sage advice. Nobody listened to this. Buy high, sell low. That's the exact, unfortunately, and Larry has a point, unfortunately a lot of people do that. A lot of people, they give into FOMO, so fear of missing out, and FUD, fear, uncertainty, and doubt. So they end up, when things are flying to the moon, they're like, I gotta get in, as, they're buying things at all-time highs, and then, when there's a correction, all of a sudden they're in the red, and it's like, oh no, I made a mistake, it's going down, I can't lose all my money, I gotta sell. And then they realize a loss. That happens a lot, unfortunately, especially with newer investors. The thing is when the price is going down, if anything, if it's got good fundamentals and if the whole market's going down, well, okay, it's time to buy more. It's not time to be selling. It's just one of the, especially if you do get in. If you get in an all-time high. All right, whiteboard time. Time for the whiteboard, maybe, as soon as I find it. Let's see here. Just go over here, and we will go to the whiteboard. Here we go. All right. So yeah, so let's just say, for example, This is going to be an easy whiteboard. I don't have a lot to do on the whiteboard with this question here. But if you buy up here, let's just put a point. That's where you bought your stock. And I will draw, let me draw the stock. So, you know, here's the stock, and you bought it there. Well, all of a sudden a correction comes. I'm just going to just do this. Then I'll put this line over here. All right, so let's say this is what happens. Well, if this is a new person, they bought here and they're watching that price go down and down, they're like, oh my God, no. Well, here's the thing. Let's say you were to also buy here. Well, all of a sudden, instead of having your cost here, your cost is sort of in the middle. It's down there. And let's say you buy some more down here. Well, maybe your cost is coming down. You buy more, and then you're averaging your cost down, so that when we get to, when we get to this part, and it's going up again, well, you're going to be back in the green before somebody who sat there waiting, or if you sold it, obviously, if you sold it down here, obviously, you've automatically created a loss. So it's just that thing, like it's averaging down. It's a good thing. Now, I say good fundamentals, and that is a key. So, for example, if you bought, I'm trying to think of a really crappy company. All right, we're gonna make fun of them. If you bought like WeedMD, everybody knows WeedMD went bad, okay? But there was a lot of excitement. When weed was first legalized in Canada, a lot of people jumped on things like WeedMD. Everybody thought it was going to the moon. I didn't think it was going to the moon, but I thought there was a good chance to make some money on it. So I got in absolutely. Well, WeedMD, all that initial hype, and then it pretty much just kept going down until, I'm putting this little, all right, I'll explain what that is in a second. So a lot of people were buying WeedMD, and so, let's put in those, I'll use a smaller red. A lot of people were buying it here. A lot of the excitement. There was a lot of excitement, so a lot of buys up here in that area. And then it went down, and then people were like, uh-oh. Some people bought, some people sold, some people took those losses. Some people still hold it. Some people right now, WeedMD is a bag in their things. Now, I bought I think I bought about here. So I'll just make a bigger circle for me. I bought about here. I went up and it went down. And I was just like, I can't believe it. I wasn't worried when it was going down because I still thought, I thought it might have been a correction, but it soon became clear to me that everybody overestimated the power of weed. Go figure, right? So I happened to be online in my portfolio when this happened. So this was Wall Street Bets. Wall Street Bets. They came along and they kind of saw that everybody and their dog, they just saw it as one of their targets of something they could explode in price, and they did. And sure enough, I got out right about here, just by dumb luck. I saw it pumping, and I was like, I put my order in immediately. And by the time my order got processed, it got processed right about here. And then quite literally minutes later, it was all the way down here. It went up and down really fast. I managed to get my order out. So amongst a lot of the people I knew at that time online, I think I may have been the only person to make a profit on this. And it was absolute dumb luck. But yeah, it happens. It happens. All right. Paul says, let's get back to the big screen. When Bitcoin hits 130K, then strategy will go up, and in turn, MSTE will go up too. Yeah, exactly. Exactly. And we'll see. I mean, how high will Bitcoin go before it's done? I originally thought 120K, and it hit that. It did break through that. And I I think, like, I want to conservatively, I'm thinking 130K is a good target before it goes back down, but I am willing to admit it could go as high as 150. I don't think it'll go more than 150, but because I'll tell you right now, 150 is a major psychological level. If it hits 150, there'll be a lot of people taking profits. A lot of people, and that could trigger a sell-off, and that could be what starts a winter. It could start a crypto winter. We'll have to see. But yeah, I can't wait to see. All right. Let's see here. You have the opportunity to do it with Tesla. So the buy high, sell low. Oh boy. All right, exactly what I did dumping Palantir, moved sideways into QQCL. I like QQCL. So QQCL, that's the leveraged version of QQCC. And, you know, once again, it's a NASDAQ ETF. It's done fantastic for me in the past. So I do love that one. Cowboy did a sale of my WCP and bought oily, double the dividend, roughly same cost per share. Nice. Larry, I'll buy a 5K course to buy high and sell low. Have not touched Tesla, probably never will. All right. Let's see. Tesla doing well, and a fund cost is low. Yeah. So here's the thing. I like Tesla, TSLY. Not I would never, but I like it from my trading side. That's the thing. So with Tesla, one of the things with that is that sometimes Tesla gets really low, and I know it's going to bounce back. I will sometimes jump into Tesla and ride that up. But I tend to use that more as a swing trade than anything else. Because as you guys know, like I said, HHIS, diversification, I'm not worried. I'm happy with the dividend. All right. Paul says, I bought Palantir in the low 130s, then sold for 177, then bought Palantir back at 158. Yeah, now Paul is like one of these ultimate swing traders. He's really turned into a pretty good swing trader. All right, and let's jump past the comments. Gursky saying, I'm having trouble wanting to buy HHIS now because my cost is $11.86. I'm in a similar position with Bank. Yeah, and Bank has done fantastic too. I mean, just speaking of a really good ETF, I mean, Bank, boy, yeah, they've done fantastic. They're they're well in the green. Let's see, Tim. Tesla recent price performance shows strong gains, especially in the short and intermediate terms. This suggests positive investor sentiment and potential for further growth. Tried YMAX payout not enough to make up for the volatility I got out. Okay, fair enough. Bill says, I find income ETFs more offensive than politics or religion, if I'm being honest. All right, fair enough, fair enough. And that's the thing. I mean, there's all kinds of investor types. So, Bill is obviously not on the income side. And, I can understand that. I can understand that. There sometimes tends to be a bit of a dichotomy between income versus growth. I think there's a good middle ground, but at the same time, and keep in mind, like, for example, this video that I scripted today, it is coming out tomorrow. Actually, it's coming out Tuesday, but channel members will be able to see it tomorrow. But it might be late. It might be late because it's a big one. We're looking at the dividend growth version of that 100K portfolio. And it's interesting, guys. It was getting long, so I was planning to end that video with a comparison of the three styles. But I just realized that should be its own video. So it's probably going to be its own video. I might even do it the following next week. I might, to sort of cap it off. So the fourth one, a breakdown of everything all together and compare and contrast the three different styles. That could be fun. I think that's going to be fun. All right. Tim says, Bill, you should see on Blossom. It's a hot topic. Oh, it is. Oh, it absolutely is. Now there's, I would say, when you look at the Blossom community as a whole, I would say there's more dividend growth investors than income investors on Blossom. And sometimes, yeah, it's social media, right? You're going to get comments from both sides for sure. Paul says, I've been buying Tesla since everyone was hating Elon in April. All right, fair enough. All right. Good old Tesla. For sure, Paul. And I look around town, there's a lot of Teslas driving around and they're not going anywhere anytime soon. All right. Caroline. Who's Caroline? What's your stand on HHIH? Yeah, so HHIH, let me pull this up. I know it's really, really new here, so let's see if we can. All right, here we go. So this is your Harvest High Income Equity shares. All right, let's pull it up here. And so yeah, so once again, this one is really, really new. Like it launched at the end of August. So, it did launch in August. It has gone up. So not too shabby. Like it launched, well, it's right here. It says that it opened at 11.96. So it would have launched technically at 12, opened at 11.96. So it is up for sure. Now, it's a monthly. It's got a good distribution on it. I haven't had a lot of time. I haven't really had a lot of time to sort of see where this one is gonna go, but it's not bad. It's not bad. I've got no complaints about it. I just need a little bit more history to see what's going to happen with it. But HHIH, it's fine. It's fine. I've got, I love my HHIS, so I'm all in there. HHIH to me, it's another it's a bit different. It's a bit different, but I don't have a lot to say yet on HHIH. I haven't looked a lot into it either, so I'll be honest on that. But yeah, I do like. I mean, overall, I do like this whole series. I do like these whole high income equity shares series. Now, I like the diversified versions, but and this one will have more diversification than say it's just getting a single stock. So nothing wrong with that. Panic selling? No, don't do it. Don't do it. Diamond hands, unless the fundamentals are bad. There is time when you should sell. Absolutely. Not for panic. Panic's not a good reason. But there are good reasons out there for sure. Paul says market makers want to shake you out of your shares when it dips. Yeah, that happens. All right. Tanya, so thoughts on HPS.A. So this is one of the Hammond companies, Hammond Power Solutions. They've been down all year and it looks like it's heading down again. Do you see the possibility for good news on the horizon or should I cut my losses? All right. Well, whoa. Let me see. How far behind am I? Oh, I'm about 17 minutes behind. So we're going to have to jump over a few things for sure. Yeah, so tariffs have not been the best for the Hammond companies for sure. Absolutely. They've been suffering a little bit, but at the same time, their fundamentals are still solid. They're still very sound. Both HPS and HMM.A. They have a lot of business, but a big chunk of that business is in India. That is definitely being impacted by tariffs. Does that mean we're not going to see the stellar behaviors that we've seen in Hammond probably until the end of the Trump administration? Probably. I could be wrong. I don't think. To me, I'm still okay with them. I'm okay with riding it out, averaging down through it. I think on a long term, I think they're going to be fine, but I think it's going to be a little bit rough. It's going to be a little bit rough for a bit. But at the same time, and now let's throw the other shoe in there. There is that possibility, depending on if they can get involved, at least on the Canadian side, if they can get involved with some of the infrastructure projects. But even then, a lot of these projects won't be starting for a couple of years. And a lot of the initial work doesn't really involve the stuff that Hammond brings to the board. So like, transformers, power enclosures and stuff. But at the same time, other things that they can benefit from, of course, are if we get more data centers being built, the continued explosion of AI, if that keeps moving forward, that can also be good for them. So they do have some positive, they have some negative, all at the same time. Well, you put that all together, and what does it mean? It means that it could be flat. It could be flat for a bit, but I still have faith in them. That's, you have to do, obviously you have to do your own due diligence to decide whether you want to cut losses. I don't think you have to take the losses, but obviously, if you're uncomfortable, if you're getting to that point where you're like, I would just like to move it, sort of like going back to the question of, is it time to make a sideways movement? Sure, it could be. But it boils down to your risk tolerance. I still have a lot of faith in these companies, both Hammond companies. So personally, I don't see me selling, but it can be hard sometimes if your company is not doing what you want to see them doing. So I know right now, I even have in the challenge actually. Let me pull this up and see where they're at. In the challenge, I do have the other Hammond company in it. So HMM.A, and where is that currently sitting at? So right now, right now I'm still in the green on that one, 7.78% total return. So I'm pretty happy with that. Oh, close that. There we go, and close that. I completely covered over my entire thing when I pulled that up. All right, Tim says, HPS. So Hammond Power Solution.A analysis. The presence of a bearish flag pattern suggests caution, while the bullish engulfing line offers a glimmer of. That's kind of what I just said, but in different words. This combination indicates a need for careful observation. Yeah, absolutely. I would agree with that 100%. All right. Yeah, Kelly. I have a spite hold on my account. I got busy and won't pay attention when we'd swan dive, so I have an unrealized loss of $1,500 for those 3 shares. Boo hiss weed. I agree. Rory doesn't like Air Canada. You don't have to like a company to make money off of them, though. I will put that out there. Cowboy, want to get Fortis, but it keeps climbing in price. Need a dip. Maybe Trump will run his mouth again, giving us another liberation day so I can buy in. Keep in mind, Fortis right now is a utility company, and we just had a rate cut. That tends to push them up, not down. So that's something to keep in mind. Let's see. Paul says Walgreens Boots is a bad company. Everyone thought great, high dividend. Then they cut the dividend in half. Then the stock went down 50%. Oh, yeah. You cut the dividend in half, and you are going to get a lot of investors will lose confidence. A lot of investors will bail ship, and that can then drive that price down even further. Some of the dividend cuts in the past that Algonquin made certainly wasn't good for their share price either, even though they were good moves in the long term. Let's see. Rory says, Fortis is much better than Atco, which I sold last week. Bad financials. So yeah, like right now we have 2 dividend kings. So Canadian Utilities, which is a company of Atco, and Fortis. And Fortis hands down, as far as I'm concerned, is the better company between the 2. So I love Fortis. Canadian Utilities is not bad, but Fortis is. Fortis has their diversification. Like they're based out of St. John's, Newfoundland, and they provide power, and they've got a lot of utility set up in Canada as well as a lot in the United States. They've got a big footprint down there, and the beautiful thing is, their American division, it's not being impacted by those tariffs because they can sell to Americans tariff-free because they are set up in the U.S. as well. That's kind of a really nice thing for them. Tim says, Fortis has shown resilience with a positive long-term growth trend despite recent short-term challenges. Yeah, they're doing fantastic. All right, let's see here. Look at Sophie long-term chart up and to the right at 45 degrees. Sophie. I used to have a dog named Sophie. Kind of funny. But it was spelt different. It was F-I. There we go. Sophie, here we go. So SoFi Technologies. It's pronounced SoFi, but I saw Sophie at first. I'm just like, And let's pull up just the last year. And yeah, I mean, look at this. That's not bad. That's not bad at all. Now, when you look at SoFi, all right, they're out of San Francisco. Student loan refinancing, all of that fun stuff. Credit cards, mortgages, investments. So yeah, there's a lot. There is a lot of. It's kind of interesting. People who lend money, they tend to do very well when people kind of need to borrow money to survive. Is it predatory? I don't know. You could call it that. I personally, I don't invest in any of them, but there is money to be made there. If you're okay with it, there's money to be made there. All right, let's see here. Yeah, Tim's making some money. Look at that, from 24 to 29. Now, I won't invest in them. Would I swing them? Yeah, I would. I would swing them for sure. Larry says, I knew Bitcoin was going to jump high when my mother, who only buys bonds, grabbed Bitcoin between 28 to 30K a coin. Yes, absolutely. Well, my mom, who's coming to visit soon, she bought a tiny bit of Bitcoin back just before it crashed. Oh boy. And she didn't even buy much. Like, she bought about $500 worth of Bitcoin. And then it went and crashed, and she was like, oh, it's going to zero. I'd get text messages. It's going to zero. Did you see the Bitcoin today? It's going to zero. It's going to zero. Over and over again. And I was so glad when we finally got back above. We finally got back. Now she's got, I think now her little $500 investment's worth like $1,000. And so she keeps talking about, when's the perfect time to take it out now? And she's all happy about it. But boy, if she couldn't figure out how to remove it, luckily, because she would have sold at a loss. She would have cut her money in half, and I would have never heard the end of it. So, now that it's worth about $1,000, I'll probably help her get it out when she gets here, and then I don't have to hear about it anymore after that. Paul says, remember last cycle, everyone said 100K. That never happened. This time, there's more corporations and governments buying Bitcoin, but ETFs are fickle. Investors will dump when fear is temporary. Yeah, there was a lot of people who, heck, if you guys remember the Danter Banter, the Crypto Night in Canada, I used to guest on that show. The Danters they even had hats that said 100K. Well, they had to put those hats away, but they could wear them proudly now. But there was a lot of FOMO going on, and there was a lot of speculation on where Bitcoin was going. But yeah, this time, and there's still some of that now. Like, I've heard people online, I've heard people say Bitcoin's going to 250,000 this cycle. I'm like, no, it's not. But I still hear it. I still hear it. All right. Own Your 50 Plus says, thanks, Candace. I did move a lot of BCE that dropped right after I bought it last fall. I was lucky it went up a bit, so my loss was reduced. I was really happy to see them go. Yeah. Poor Bell. I mean, Bell has been making some moves in the right direction, and cutting their dividend was definitely a huge, huge one for them. But the problem is, when it comes to Canadian Telecom, they need to diversify out of just what they're doing now, because there's not a lot of growth room left for them. So that's what we got to see. Paul says, I only got one covered call ETF, Nicholas Crypto Income ETF blocks. It was more total return since June 16th by 20% higher versus IBIT. I might not repeat, or it might not repeat. Okay. Canadian Market Bank, GLCL and ENCL. Yeah, so GLCL. So I recently did a deep dive on GLCC. So guys, if you watch that and you're like, I like that, but I'd like a little more income, there is a leveraged version, GLCL. I totally forgot to mention it in that video. I really should have, but I forgot to. Most people do not understand that Tesla is not a car company. That's right. Tesla is an AI and robotics company. And that's one of the things right now. One of the big things that they are working on are the humanoid robots. And if you remember, we did a story about the compensation package that Tesla offered Elon. And A lot of that was based on, robo taxis and robots. Robots. So robots are definitely a big thing. Yeah, and what Brian is saying here, cars are a means to an end. They are an AI company that makes cars to test their AI and robots. Don't forget the robots. Yeah, definitely more than just cars. When does Elon sleep? I wouldn't be surprised if Elon has his own little Elon bot that just makes Elonisms and tweets them for him. Maybe, but it's hard to say. Elon does kind of have that look that says, "I've been awake for a long time. Ask me how." That's kind of that look he has. All right, I'm gonna try to get caught up a little bit. Grizzly. Grizzly says, I've been using HXQ for my NASDAQ exposure. I love HXQ. HXQ, you don't get a dividend with them. It's pure growth ETF, but I love it. In fact, HXQ might very well show up in Tuesday's video. I'm just saying. All right, somebody using the QQQ. I love it. It is known that U.S. market always outperforms the Canadian market. I wonder why would someone still be investing in the Canadian market, or is it home bias only? There's kind of a combination. Now, I will point out, though, the TSX this year, last I checked, my understanding is, maybe I'm wrong on this, but I heard that the TSX has been outperforming the S&P 500 this year. So right now, we seem to be doing really well. Now, there's a lot of different things that could be going on. Obviously, there is money inflow from a lot of people who've decided, I'm not going to invest in the U.S. right now. Some people are doing that. Some people have been pulling their money back home. But there's also been an outflow of some foreign investors who are like, oh, those tariffs are going to kill Canada. Let's get out while the going is good. You got that side of it as well. But right now, yeah, the Canadian market is doing good. And depending on what you're looking at, depending on your sectors, so you got to look. There's some huge sectors in Canada that I think can't be ignored. One of them is mining. Our mining sector, a lot of our gold companies, they're huge. Also, within mining, some of the best uranium in the world is coming out of Canada. So those are areas that I wouldn't ignore. I definitely wouldn't ignore. Our banking system is very resilient. And when all crap hits the fan, our banks will still be standing on the other side of it, no matter what. Not saying that all the U.S. banks will fall, but well, maybe some regional ones, depending on how bad things get down south. But yeah, I mean, but nonetheless, you got to look too that when you are investing in the Canadian market too, a lot of times you're investing. So, for example, if you're investing in HYLD, well, you're investing in the U.S. You're not even investing in Canada. You're just using a Canadian company to do it. So you do get a lot of ETFs will give you a lot of U.S. exposure. But there are some ETFs, obviously, that are Canada specific. So like HDIV has a lot of Canadian exposure. VDY, a lot of Canadian exposure. So I think there's room for both markets, and I think it doesn't hurt to be well diversified across the North American markets and maybe get some exposure to the world as well. That XEQT or VEQT or ZEQT, whichever one is your flavor. King of Day. Do you think VU should split soon? It's getting too high and not every broker offers fractional shares. I think both VU and VFV should split. I think they're both getting too high. So yes, I think they should. Will they? I don't know. I don't work at Vanguard, but I would certainly like to see that. I think you're right. You are correct, but I think a lot of folks don't like the thought of the exchange rate on our northern peso. Maybe. Tesla needs to buy Hammond. That's a thought and a half, Paul. That is a thought and a half. I like it. I don't think it would ever happen though, because I mean, both the Hammond Power Supplies and Hammond Manufacturing. It was started by a father and his two sons. It's kind of almost a family business in many ways, even though it's grown well beyond that. So I don't know. I don't know if they would sell. I quite literally don't know if they would. And now, oh my gosh, I could be wrong here. I think the father might actually be dead at this point, and it might just be the two sons, but I'm not 100%. Take that with a grain of salt, a big grain of salt, because I'm not 100% sure. I just thought I read that somewhere. All right, own your 50 plus. I did also do this with a few smaller holdings that did rise. Mostly I did okay. I'm trying to build more safe ETFs with a few blue chip stocks. TD, CIBC, and Loblaws did well. Still have TD and CIBC. Okay, all right, fair enough. So yeah, and that's the thing. I mean, keep in mind too, own your 50 plus. Not every trade's gonna work. If every trade works, then you might be a genius at investing. You're going to have duds. You will. Every investor is going to have duds. Every investor is going to take a loss here or there. The goal is always to have a lot more better. And when you're doing long-term investing, usually you can do pretty darn good. But even like Warren Buffett's had a lot of losses over the years, but his wins have absolutely dwarfed his number of losses, and a lot of his wins have done very, very well. So it is something to always keep in mind. But keep in mind too, somebody like Warren Buffett, he will get rid of those dogs. So he will do those sideways movements as you were asking about. He will absolutely do that. No ands, ifs, or buts. If the fundamentals start faltering and the company is not working and not doing what he needs it to do, he's going to move his capital elsewhere for sure. All right. Yeah, exactly. This is what I thought. So yeah, the TSX is outperforming the QQQ. Canadian dividend stocks outperformed the QQQ in the last year. Yeah, it's actually interesting. I was looking at a stock earlier today, a Canadian stock. Oh yeah, I was looking at HXQ. And I was looking at a Canadian tech stock, one that just invests in Canadian tech. And going into it, I was expecting the U.S. tech stock to have done better. Sorry, not stock, ETF. But the Canadian one absolutely was kicking butt. I was like, oh, interesting. But keep in mind, the Canadian one has Shopify. So that certainly helps. All right. Own your 50 plus. Basically, I trimmed some of the highest and lowest because of the market now and my circumstances. All right. Fair enough. Yeah, absolutely. And that's the thing. You can ask me a general question, right? But your circumstances, my answer could be A, but your circumstances might say, nope, can't go A. I got to do B. And, that's kind of the thing. For sure, because I get a question, I don't get your circumstances and everything as well, but they absolutely are very valid. And because we'll look earlier, we were talking about income. So some people will go with income ETFs, even though they're getting a lower total return because they need that income, especially in retirement. If that is, if you're not making enough money on your OAS and your GIS, and you're relying on those tax-free dividends coming out of your TFSA every month to make ends meet, well, you're going to be like, what? Oh, you mean I can have a higher total return but less money in my pocket right now so I can eat? Well, that could completely change the equation. Reverend Ramirez, good to see you. What is the reasoning behind tax loss harvesting? Seems weird that government would give a tax break for a poor stock pick. That's a whiteboard question, Reverend. It's a whiteboard question. Let's do it. Let's do it. All right. I just need to find the whiteboard. I've got way too many tabs open. That's my problem. That is my problem. Is this it here? Yeah, this is it. All right. So tax loss harvesting. I'll just call it TLH. With tax loss harvesting, here's the thing. So if you have a stock that is down, all right, and obviously if you sell it, I'll just use that as a sell. You're going to have a capital loss. Simple as that. So there's your capital loss, and that of course can be used against a capital gain. So if you have a stock, and don't worry, I'm going to get to the more specifics here in a moment. I want a green. I need a green. If you have a stock that is similar, that's up, and you sell it, Well, you create capital gains, so CG. All right, so capital gain, once again, this here is taxable, 50%. So 50% of that taxable gain will count as income. All right, so if you had a capital loss of, and let me pick a, I'm gonna go black for this. Let's say you had a capital loss of $1,000. And you had a capital gain of $2,000. But remember, 50%, so technically you're only going to be paying tax on $1,000. All right, so that's interesting. So you can use that capital loss against that capital gain. Here's the rub though. Because you're thinking, oh, well, only 50%, 1,000, 1,000, it doesn't quite work that way. So in this situation, that 1,000 would take it off of here, leaving 1,000, knocking that capital gain down to 500. So, just I thought I would just sort of mention that just because. But here's the thing. Let's go back and let's actually go. Let's get rid of that and get rid of that. We'll leave that. But we'll just say if it were 1,000, 1,000. So it's apples to apples. Okay, but why is the government letting you do that? It's quite simple. It's quite simple. So you take that capital loss. So you've got $1,000, and what you do is, let's say, for example, you are invested in stock A. It's down. So let's say the market's down. If the market's down, you're going from A because you sold it. Well, you got to put that money into something else. So you put it into B because, why not? And B goes up. Well, here's that thing about B. You ended up buying B at a lower price. So all of that money that you have saved by taking the loss and creating this capital gain, it's going to turn into, as B rises, it will turn into a capital gain. So what you've done is you haven't not paid those taxes. They haven't evaporated. What they've done is you've basically just moved that loss. Basically, you move that loss into a future. So you're taking that now to use against this. But in the future, because you've now got that money that with a market that's down, you bought another asset, this will go up. So if you didn't do this, let's say you stayed in A and the market gets better and A goes up to here. All right, wonderful. But if you had made that sideways movement here, when we'll say you started originally here and you went down, well, if you made that move here and, this here, goes up as well, we'll say it goes up to here. Well, that capital loss, it's in there. That's all going to count as capital gains on the way back up. And even if, we'll actually, let's just make it even. Even by the time you get back to the even spot where this stock was originally, all you've basically done is the capital loss that you took, you've now parked it into, you basically parked a capital gain in that other asset. So if you sell at a higher time, you're going to pay. So if you had sold this one, your capital gain would have just been from here to here, right? Or sorry, from here to here. There's where we started. So that would have been your capital gain right here. But because you sold it, took it, you used it on something else. Who cares about that? But you bought this. Well, when this comes back up here, so if you made a sideways movement, for example, you have a bigger capital gain. So that capital loss that you're using on something else, it's been transferred over onto this. So you're still paying it. That's the whole thing. You are still paying it in the end, but you're kind of like, it's kind of like the RRSP where you're sort of deferring the taxes to later. That's what a capital loss harvesting does. And where it works out really well is if you have a cash account. Obviously, it's a cash account where you got your capital loss, right? So let's say you generated $1,000. And if you had a bunch of room in your TFSA and you wanted to buy, now you can't buy the same stock. They're too smart for that. But let's say, for example, you did your capital gain with A, but in your TFSA, you bought B. So you took that $1,000 and you moved it into here. You took whatever the price is of the sale. It was $1,000 loss, but you took that sale and you moved it into your TFSA because you had room. and then you bought your sideways movement in there, then you beat the system. And that's the only way you beat the system, because now you no longer have parked, that capital loss has no longer created a future capital gain that you're going to get hit with. So anyway, that's basically in a nutshell. So yeah, there's that one slim situation where, yeah, you don't have to worry about it. But the problem is, and I can think this is why the CRA doesn't really care so much about that situation, is that a lot of people who are making really big capital gains outside of their TFSA, usually it's because their TFSA is full and they don't have room for that type of a move anyway. So it's kind of that thing. Paul says we do not see the screen. Oh, that must have been, oh, that was a while ago. That was like 20 minutes ago. I think you can now. All right. Now I'm going to push ahead a little bit. Push ahead. Remember to use those QQQ, guys, because when I start doing this pushing ahead, if you don't have a QQQ, I may not read your comment. You know, and that's what I'm doing right now. I'm pushing ahead. Uh-oh. I see the spam bot, Nightbot. Paul, justice delivered. Stop spamming worms, phrases, warning. Okay, I don't know what that was, but Paul, you managed to hit the Nightbot. Kelly says, if you wanted to invest in uranium, what tickers do you look for on the TSX? Well, there's a couple of different ways you can do this, Kelly. If you're looking for, all right, so the new HHIC, one of the stocks that they hold, is the Cameco one. So what is that? Oh gosh, I can't remember the ticker for that one. It's new. I don't memorize all tickers, but there is a Cameco one. All right, ECO, Cameco. And Cameco, they're a huge uranium company in Saskatchewan. And they've got some of the best uranium in the world. Like, absolutely the best. So that's a huge company. I think they're going to do really, really well. So they have, of course, the enhanced. So you have a couple of options. So if you're looking for income, you could go straight up with the Cameco one. Oh, boy. Let me see if I can find the ticker on that one. Let's pull up Google Cameco. There we go. Cameco ETF HHIC. I'll put it all in here. All right, I'll pull up the HHIC, and it should tell me exactly what it's holding here. All right, here we go. Well, it's holding Cameco, but I was hoping it would give me the ticker. Here. Let's click on the Cameco and see what happens here. All right, well, that took us right into HHIC. That's fine. Holdings. All right. It's not doing it. Why? All right. Let's see here. ETF facts. Nope. Oh, let's go to the portfolio. Yeah, it doesn't. It's not telling me the ticker. Guys, if somebody could just drop that in for Kelly right now. I don't know what the ticker is off the top of my head. I don't want to waste too much time. I'm so far behind. But that would be another option. Now, the beauty of going HHIC over the individual Cameco, enhanced Cameco stock, is that you get that diversification with everything else. So now I will say, I think uranium, I'm very bullish on uranium. You're probably fine with the single one, but I still like that diversification. Yeah, I know. VDY, yeah, I love VDY for sure. VU and VFE have fractional issues on Quest Trade. Oh, did not notice that. Ooh, a QQQ. Have you noticed how Loblaw is doing after the split? Yeah, let's pull it up. They haven't been doing as good as I thought they were going to do. That's for sure. All right, let's pull up Loblaw's. We'll bring up the 1 year. So yeah, so of course Loblaw had their split here. When was it? August. somewhere's about, yeah, somewhere's about here. But yeah, they've been kind of a little bit on a downward trend. But at the same time, the whole sector has been feeling a little bit of heat. So I still think the split was a good move for them. I still think they're a great stock long term. So, but yeah, I have noticed that there's been a little bit of turbulence in here. And actually, if I go to the 3 month, you can see it a little bit better. Now, they had this one little peak, but I think they split right after it. But you know, after that little peak. But I do think it's I think it's a good move for them. I think they're going to be fine. I just, you know, right now, yeah, there's been a little bit of turbulence, but it has been not just Loblaw. It's been consumer. It's been pretty much across the board. So if it's across the board, I don't worry. Paul, when to sell? You sell it again at plus 20 and it goes up another 100%. Sometimes. But you see, that's the thing. It's not always perfect, but a lot of times if I have something running and it's hit my target, like, you know, especially when I'm doing, if I'm doing a swing trade and it hits my target, I'll throw in a stop loss, you know, and unfortunately, my broker doesn't have trailing stop losses. Otherwise, it would do it for me automatically. But what I will do is, as it continues to go up, I will jump in and I will edit my stop loss and I'll raise the stop loss. So that way there, I can try to capture as much of it as it is. But now one of the dangers, and let's pull up the whiteboard again. One of the dangers is if you've got a stock going up, of course, sometimes it will retrace, right? You know, stocks almost never go straight. They normally do this retracement. So if this is the stock, unfortunately, if this is the typical size of the retracement from here to here, well, if my stop loss is less than that, I'm gonna get stomped out at this, and I will be forced to take profits. It's still profits, but that's why I tend to try to be careful. I try to gauge how fast it's moving, so that way there, with my stop loss, I need a significant, you know, like a significant retracement. But here's the beautiful thing: if this is my profit line, so let's say if I'm in profit from here, and you know, I got my stop loss here, I move it to here, it drops down. If it doesn't hit me, then I'm good. It'll continue up, and I will slowly move my stop loss up as it moves. Now with a trailing stop loss, TSL, those are fantastic because you can actually get in and say, okay, well, I'm putting in a stop loss at, let's say, for example, it was at $10. You could say, okay, I'm going to put in a stop loss at $10, and let's say, for example, that's currently worth $10.10 because it's on a run. So you put it at $10, and the way it would work is you wouldn't even actually, when you're entering it, you don't even enter $10. What you would do is you would basically put it in at like 10 cents in this situation. So not saying that you'd wait till 10 cents, but you basically put the difference that you're looking at. So what it does is it creates a 10-cent buffer. So if this were to drop down to $10.01, it does not climb. But with a trailing stop loss, if this did rise up to, let's say it rose to 10.11, well, it takes your stop loss. So your stop loss is 10 cents. So your stop loss is no longer 10. It's now 10.01. Now, the beauty with this is if this were to drop back down, so if it were to drop back down to 10, sorry, not to 10, but to 10.10, this doesn't drop. This stays. So this will stay at 10.01. So even if this dropped all the way down to 10.02, this still stays. You have not triggered anything. And then if it goes back up, as soon as it goes back past 10.11, so if it went up to 10.12, this would rise to $10.02. And it will keep doing that until eventually you will hit a fall that will trigger it. So once you have a fall that triggers it, it will sell. That's the way it works. So you got to kind of be a little careful with that. All right. XIT Grizzly. That is exactly the ETF I was talking about. Well, well done. Well done. Yeah, absolutely. I love it. I love it. All right. Paul says someone asked about uranium stocks. I mentioned LEU in the USA last week is uranium and has money as part of the big beautiful bill, up crazy amounts like 535 cents, 535% in 1 year. Holy cow. CCO is uranium in Canada with CCHI or CCOE is the covered call versions. It's up more than it's up more than that, like 625%. Yeah, no, these are doing absolutely fantastic. Right now there is a push to build more nuclear plants. If you're going to build nuclear plants, going for Canadian uranium, higher yield. It's a higher yield uranium. It is a higher quality uranium. It's kind of a no-brainer for most companies in the world. It's like get the best uranium because you're going to get better results. You're going to have better. You will be able to refine it better too. So definitely something to do. You'd think I've been talking for like 2 straight hours or something. All right. No Sunday crypto pump. And Kelly, I think I'm looking for a Canadian company. My only account is a TFSA, and I want to avoid the 15% withholding. Yeah, makes sense. All right. Paul says, I see QQQ and I think NASDAQ 100. I know. But I like it. I guess that I missed why you were doing that. Okay, well, right now, Kelly, you made this comment at 5:45. It is currently 5:55. So I'm 10 minutes behind. I need to get caught up. I'm going to skip over things, but I'm not going to skip over anybody who has a question, a direct question for me. So QQQ. So for example, if you're just making a comment like, oh yeah, I agree with you. Well, I can skip that easily. And, or if you're talking to Paul, I could skip that. It's just one of those things. It makes it a little bit easier for me to get caught up. Like right now, we're about to hit 2 hours, and we still got news. We still got the news. I'm pretty quickly gonna fire through a couple of these, by the way. So, all right, I'm gonna skip over some of the chemical stuff. All right, so I am skipping over a lot of stuff, guys. I hope you're using QQQs. Let's see. Trailing stop and other more advanced order types and durations are only available through the Questrade Edge web and Edge desktop platforms. Yeah. And yeah, another place I've seen a trailing stop loss is with the Desjardins brokerage. They have so many good stuff in that. I love what they have in it. It's just that it's so big that it's not quick. Like with National Bank, I can make trades really fast. I could not do that with Desjardins. All right. Oh, QQQ. I love it. How much do you allocate to swing trading? 1% of your investments, etc. Well, you don't have to. You technically don't have to allocate anything. I mean, if you're not, you don't have. Nobody like swing trading is not something that you have to do for sure. Now, if you're asking me, I have one account that is definitely swing trading is involved in it. I will utilize quite a bit, depending. But keep in mind, I don't make dumb swing trades. So the stuff I swing trade are stuff that I still hold my fundamental standards on it. Like I don't want to swing trade on something like I'd never swing trade a penny stock. Never, because there is a downside. Like if my swing trade goes wrong, and I mean right now I am currently sitting on, I think 4 of my swing trades are in the red right now, but I'm okay with that because I know that they're going to get to my targets, and I'm in no hurry for them to get to my targets. But that's kind of that thing. Like because I'm using fundamentally sound companies for that, I have the time, and plus. I don't have my entire account tied up in it. I probably have at least this account, the account that I do swing trading out of. I would say right now about I think about 30% is currently tied up in swing trades. It might be 40, 30, 40, somewhere in that vicinity. I haven't really thought about exactly how much, but I'm totally okay with that. And that's that thing, right? If you have an account, or if you want to do swing trading and you have a specific amount allocated for the swing trading, if you don't put it all in one basket, that's really good, because if you do, then you can sometimes be forced, if you want to continue swing trading, you may be forced into taking a loss or something, and I don't like to be forced. All right. Let's see. Own Your 50 Plus says, I had to push harder than I would have because I have to take earlier retirement or partial due to my job situation changing. So I'm leaning more to income and getting rid of some current long holds. Okay, fair enough. And that's kind of that situation. Like, if you need it as income, well, you could have somebody sit here who is a full-on growth investor and say, oh, well, you're losing total return, or you could be making a little bit more if you were doing it this way. Unfortunately, if you need that income to meet your basic needs, it's the decision is hands down what you have to do, and and that's the thing. I look at it this way: as you move into retirement, the goal is to have a better life, right? It's if you are, let's say you're going into retirement, and you've got pensions out of your, you got so many pensions that there's no need for money. Well, in that case, sure, stick to your growth dividends. Keep growing your account. Your kids who receive that account someday are going to love you for it. But if you need that money to live, you got to find a portfolio that's going to work with your needs. That to me is very important. And that to me trumps everything. Like, you need to be able to survive nowadays, for sure. Tim says, I'm the same, recently retired, no pensions, need some dividends to offset cash flow crunch. Yeah, there we go. That's exactly what we're looking at. Okay, let's see here. CCH Kimoda, it's a new 9-point CCO. One, it pays a tiny bit more premiums and has lower fees, and is at $11.39. Yeah, these 9-point is looking very interesting. I actually want to deep dive on them a bit more, because I know they're new. They're new to cover calls, so they don't have a lot of history. So it's hard for me to give them the trust that I'd like. But I do like what they're doing. I will say that. How fun are your taxes on swing trades? On a scale of 1 to 19, they're a 12. It's a 12. Are your swing trades capital gains or business income? Oh my God, I'm caught up. I'm like, oh my God, this is great. They are technically, the trading that I'm doing is business income. It's 100% taxable. There's no way around it. Yeah, I do enough that it's 100% taxable. All right, now, holy banana bread, we can actually move to a news story. This is great. We did have a retail sales report drop. So our July retail sales report, that dropped on Friday, and retail sales, they did fall. They fell in July by 0.8%. So we're talking 69.8 billion. That's what we're looking at sales wide. This does mark a broad-based decline, with 8 of our 9 sales subsectors being down. Now, oh boy, the biggest one was supermarkets and grocery stores. Sales down 2.5%. One of the biggest drags on the report, for sure. Food and beverage retailers overall down 1.3%. Clothing, accessories, shoes, jewelry, luggage, leather goods, those all down 2.9%. Core retail sales, other than autos and gas, those were down 1.2%. Now, I did say 8 of 9 subsectors were down. The one subsector that was up was motor vehicles and part dealers. They were up only by a wee bit, 0.2%. Now, volume, here's the other thing. Volume was down. So even though retail sales fell, volume fell as well by 0.8%, meaning that the drop wasn't just due to prices. Canadians actually bought less stuff. Now, The nice thing about this is that August, it is looking to rise. So August right now, the preliminary data for August is suggesting a 1% rebound in retail sales. So we'll have to see how this is all going to look. But overall for the economy, retail is a key gauge of consumer health. So right now we're getting signals that households are stretched. And we know that they are. We already know that they are. And you are seeing this as investors. We're seeing this in the consumer staples and discretionary as well. So retailers could definitely face some margin pressure. Grocery chains may struggle with slowing volume growth. Does that not sound like the Loblaws we were just looking at? Yes, it does. That's what I was sort of talking about. That's one of the reasons that Loblaws, even though they had that 4-to-1 split, it's not really helping them right now because they are facing a lot of this pressure. It will get better, guys. It will get better, but it does take a little bit of time. All right, I'm going to just quickly do one more story. Let's talk about that CPI. So we had our CPI released on was it Tuesday? I think it was Tuesday. So right now, of course, and I already mentioned this, inflation rose to 1.9% in August. That is up from 1.7% in July. So excluding gasoline, inflation is running at a 2.4% year over year. So it's slightly lower than the previous months when core inflation was a little bit higher. Month over month, the CPI declined in August a wee bit by 0.1%. And that's actually not that bad. Basically, driver-wise, gasoline, it is still declining year over year, but it's declining slower. So it's decelerating its decline, if that makes sense. So in August, to give you an example, gasoline prices fell 12.7% relative to a year ago, compared to a larger drop of about 16.1% year over year in July. So we've gone from 16.1 now down to 12.7. So that's kind of that slowdown a little bit on the gas. But nonetheless, inflation was up a wee bit. Now, where was inflation up the worst? And I mentioned this before earlier, food. Food was up 3.5% year over year. And shelter costs actually started to rise a bit again. They were up to shelter costs were up 2.6%. Transportation was down 0.5%. Meat prices, oh boy, guys, if you like the meat, well, you're paying 7.2% more year over year. Holy banana bread. Clothing, footwear, though, that's up 1.7%. Oh boy. Now, inflation, of course, it is still below the Bank of Canada's target midpoint of 2%. But it is creeping upward, and that does show a little bit of upward pressure, though not runaway, but pressure nonetheless. So core measures still elevated, though somewhat stable or easing in a few of the categories, which is good to see. There is room for optimism, which I like. And of course, this came out before the rate cut, and we still got the rate cut. So the Bank of Canada is okay with these numbers. All right, let's get back to the chat, and then we're going to jump back to the news pretty quickly. We're going to try to get this news out of the way because we're already at 2 hours. Let's see, now for the news with Knowlton Nash. There we go. Paul, there we go. The QQQ, I love it. 9 Point is only new to covered call ETFs, but I noticed them 2 years ago at the height of the cash.to type of ETFs. Yeah. Oh, yeah, no. 9 Point has a good history. I mean, they're not a bad company. They're just brand new to covered calls. And that's the thing that, I want to see. I want to see how they do. But so far, everything I've heard from them, and I listened to I don't know if it's the CEO of 9 Point. I think Adriano had him on. I liked what he said. For sure. All right. And let's jump across to our next QQQ. Loblaws is competing with people going to Costco, Walmart, and the butcher, and the farm market, and the bakery. Oh yeah, absolutely, for sure. My TELUS TV, internet, and TV contracts expired, and they each went up $10 each. Oh yes, I have noticed that. If you got anything that expires, you're probably looking at the renewal being a little bit more. Now, in some cases, guys, in some cases, it doesn't hurt to try to cancel. Sometimes if you try to cancel, they'll lock you in at the price that you were at before, and they'll say, okay, well, how about if we give you that $10 discount for the year? It adds up, guys. It adds up, so it doesn't hurt. Especially when you're talking like TELUS, for example, you can call. They will, the person who answers the phone, they won't deal with you, because as soon as you threaten to cancel, they got to kick you up to their retention department. And those are the guys who get the deals. In fact, first of all, I would look and see what the new offers are for the competitors and find the cheapest one you can find. If it's lower than what you're paying, and say, look, Rogers right now is offering me this deal to move. I love you guys, but I don't know if I can turn this money down, and see if they'll match it. It doesn't hurt to do this. And yeah, Tim is saying, got to threaten to leave. You do. You absolutely. You need to get threatened. You need to get up to retention. And most agents, as soon as you say that magic word cancel, then they're gonna send you up there. In some cases, you can just call and say, look, I need to speak to your retention people, because if they can't pull a miracle out of the hat, I'm leaving today. Just do what you have to do, for sure. Have to stretch a buck, especially on food. Jay says, I'm moving to Oxio once my contract ends with Rogers Internet. Okay, I don't know who Oxio is. They're probably a reseller, I'm going to assume. Jane's Chicken Nuggets. I don't know what that is. But I do like chicken. I can't actually remember the last time I've had chicken nuggets, so it's probably been at least 6 months. Paul says, technically, that's $10 each. Increase was $6 with a 40% discount. With the 40% discounts, any regular prices get 40% off, so no threatening to leave. Oh, okay. All right. Fair enough. If you're already getting a really better deal than you can get anywhere else, then yeah, you don't have a lot of room to stand on in that case, for sure. All right. We only got 3 stories left. We've got an Nvidia story. So Nvidia, as you guys probably heard, they are making a $5 billion investment in Intel. So they're basically buying about a 4% stake, and that's making them one of Intel's biggest shareholders. Now, the other big shareholder is the U.S. government. They actually purchased a 10% stake last month. And that was in part of a push to shore up domestic semiconductor production, because they want to take it all away from Asia and get it all back on American soil. Now, Intel, well, they've struggled lately, and let's just say this: they were once a dominant chip maker, but they haven't done that well in the AI boom. They've been falling behind here. Their market cap is sitting at about $100 billion, so it hasn't moved a lot. Like, they've stagnated there. You look at Nvidia, they're like $4 trillion, so it's like night and day. Now, Nvidia, their biggest strength, of course, is that they're dominating the AI chip market, but they do rely on manufacturing partners. So for like TSMC, Taiwan Semiconductor, they by investing in Intel, what they're doing is they're actually able to diversify their production away from Asia, which of course aligns with the U.S. national security priorities, which is fantastic. Now, the Trump administration is, of course, aggressively pushing to secure America's chip supply. So Intel's CEO, Lip-Bo Tan, he faced some pretty big criticism from Trump over alleged China ties, but the government and now Nvidia are doubling down to keep keep them relevant. Now, the market loved it. So the market, of course, Intel shares surged about 25% on the news. Nvidia shares also went up, not quite as much, about 3%. But nonetheless, it's going to be pretty cool. Now, the two are planning to collaborate on personal computer chips and data center chips. Some key growth areas as AI computing demand continues to skyrocket. And the CEO of Nvidia, so Jensen Huang, called it a fusion of two world-class performers. And he says it's positioning themselves as the foundation for the next era of computing. So I think it's a good move. For Intel, definitely they're getting a financial lifeline, and this is going to give them a bit of a credibility use. So Intel will, like I said, Intel's getting relevant again. I'm liking this move. All right, let's jump to the next story. I've got a Brookfield Asset Management story. So, Figure AI. So this is that group that makes those robots. You may have seen some of the stuff on the internet where they have the robot doing dishes and stuff. That's Figure AI. So they're a robotics AI startup, and they specialize in making humanoid robots. Well, they have announced a strategic partnership with Brookfield Asset Management. So the deal basically includes Brookfield helping Figure build the world's largest and most diverse real-world humanoid pre-training data set. And also they're going to help with scaling up AI infrastructure for Felix's Helix, their Helix model. That's one of the models of the robots. Brookfield is also investing in Figure's current funding round as well. So that's kind of an interesting thing. So why is this kind of significant? So data currently is the bottleneck in real-world robotics. Robots trained only in labs or using synthetic environments often struggle when deployed in homes, offices, logistics centers. So access to varied real environments is crucial. This is where Brookfield comes in because of their large real estate holdings. So they've got residential, commercial, logistics. This can give Figure, well, a whole bunch of environments to train in. Now, Brookfield currently has over 100,000 residential units, plus vast commercial space, and of course, all that logistics space too. And this would give Figure basically potential access to everyday human behavior video data in many settings. There are some privacy concerns over this whole thing. So collecting human video in residential and commercial spaces, that does raise privacy concerns for sure. You know, how are people going to be notified? How is that video going to be used? What kind of consents are going to be required? These are things that are still being worked out, but it sounds like they have a little bit of a deal, and you know, this is interesting. So for Brookfield, it kind of moves them beyond just real assets in the real estate side as well. It's moving them into AI infrastructure and robotics of all things. And for Figure, the access to the real world spaces as well as Brookfield's capital, it's going to give them a big boost. It's going to help with their scaling and some of the data diversity. So overall for the robotics AI sector, oh boy, this could absolutely accelerate humanoid robotics. Success would push forward that general purpose robots can do. Also, it could shift where training data comes from. So less lab, more human everyday environments. I'm okay with this. I mean, if I had a space from Brookfield, I would give my consent. I would be okay with it. I know some people won't like it. I know some people won't like it at all. And we got one last story. I'm just going to get it out of the way, and then it's all you guys until the end. It's all you guys until the end. All right. So, Canadian miners have been hunting for capital to fuel the critical minerals boom, and it looks like the Gulf states are stepping in with some deep pockets. And when I say Gulf states, we're not talking about Texas and Mississippi and Alabama. We're talking about, well, the Persian Gulf. So, it looks like well, it's already begun. So Qatar, their sovereign wealth fund has just dropped $500 million into a certain gold company by the name of Ivanhoe Mines. And if you guys remember, we were talking with them the other day. I just did a I did a swing trade on it, and it was a profitable trade. I don't know if this had anything to do with it, but Qatar picked up a 4% stake in Ivanhoe. The move is basically, it's kind of reshuffling Ivanhoe's investor base, which has long been dominated by a lot of China-linked companies, actually. The cash is going to bankroll some of their projects in Angola and Zambia. But the ripple effect will be felt in the Canadian mining finance circles for sure. So as it is right now, Middle Eastern sovereign wealth funds are trying to pivot away from the pure oil and gas bets, and they're really starting to look at Canadian miners. They're like, this is a sector that's ready to explode. We want our money in it. And it's kind of what I've been saying for a while. Currently, right now, they are looking, apparently some of their funds are looking at about 100 new mineral projects over the next decade. And they're not just writing checks. They're actually eyeing even their own geological backyard as well. So most of the world's geologic pattern lies in Islamic countries. So they're like, hey, the more deals we can make with Gulf states, the better chance we have of getting access to some of those critical minerals that they have as well. Some of that gold in the case of Ivanhoe. So I think this is pretty darn good. Saudi Arabia slowly becoming a bit of a heavyweight. So they have a public investment fund. They've already also grabbed a 10% stake in Vale Base Metals last year. And they've openly said that Canadian miners are in their sights. That's what they're looking at. Some of the other Gulf players like Abu Dhabi, there we go, and Kuwait are circling around looking to turn some of that oil riches. They're looking at everything from lithium, copper, and nickel. So all of that, of course, clean tech critical minerals. So it's going to be very, very interesting. And the beautiful thing is, if the Chinese cash is now kind of treated as more of a security issue, it opens up the door for the Middle East, and they're willing to walk through it. For now, Ottawa is absolutely, they're quietly cheering this new diversification, but we'll see if they ever get to a point where the lines between strategic partner and security risk can be crossed. Hopefully not. I like it. I'm all for it. Now, coming up, as I said, coming up on the channel this week, we do have, of course, the dividend growth. The dividend growth one, windfalls of the 100K portfolio, that's coming up. I don't yet know what the deep dive will be for the end of the week, but it'll be fun. It'll be fun for sure. So let's get back to you guys, because guess what? That's the news. The news is done. It is now just whatever's in the chat for now. Let's take a look here, see if we can get caught up. All right, we'll start off with a QQQ. Of course, a QQQ. Those are the questions directed at me. Knock on wood, our 3x35 Kudu 65 gig plans have not gone up. No discount on those, even though Kudu is a TELUS company. Yes, absolutely. Tim says, Nvidia chips in every computer I own. Yep. Oh, I have an Apple chip in my studio. Cowboy, let's see. The labor cost in Asia is much lower. An Apple phone made in the States will be $5,000. Yikes. Yeah. Now, I'm just wondering if Nvidia has any role at all in the making of M chips with Apple. I don't know. Honestly, I don't know. I'm gonna have to look into that. So no trading with your Commodore VIC-20. Oh, a VIC-20, yes. Those were the days when those were actually VIC-20s were before floppies. You actually would use a cassette tape. You would record, you would save onto a cassette tape and then to load it, you would have to play the cassette tape to the computer. Oh boy. Talk about slow. It's slow technology. Things have changed. AMD crashed 5% the first day of Nvidia and Intel announcement. Yes. Yeah, absolutely. AMD is probably not very happy about this at the moment, but I mean, AMD is still going to be fine. They're going to continue positioning themselves, but if you guys remember, I kept mentioning that Nvidia is an innovator, and that also just goes with the whole political. I don't want to use the word political, but it just goes with the whole environment around what they're doing. And striking this deal with Intel was pure brilliance, and I think that's going to help them out big time. AMD though, they're going to stay relevant. I think AMD is still a really, really solid company, and I think they're still going to give. Eventually, I think they will give Nvidia a run for the money for sure. Rory, instead of Google AI, let's go back to GeoCities. GeoCities, oh my God. Yep. All right. Let's see here. I'm going to jump ahead a little bit. Just got bammed. I like that. Yep. Brookfield Asset Managed. All right. Why not? Chucks says, is there any Canadian fund that drips at NAV? I can't think of any. But there might be. Anybody who uses drip a lot uses drips. Let me know if you know of any. I don't know. Abu Dhabi. All right. I didn't say I was good at pronouncing countries, but I try. What's your favorite Canadian copper mined ticker? I'll show you. I will show you. It's actually a fairly small company, and I've brought it up a few times. This is my favorite. I like them a lot. Mary. So Mary Maca Corpa. Mary Maca Copper Corporation. Let's just pull up their last year. Now they exploded recently with some of the news that's been happening. So for example, with the whole tech resources thing and Anglo America, that has been big for them. And I think copper is just. It's predicted that copper by 2030 is going to be at least going into, if they're not already, they might be going into a shortage. And I think copper is going to be big. Copper is going to be huge. Copper is used in so many things. There's a reason that new buildings have guards protecting the copper in their in their construction work, because people will go in and just steal it, rip it right off the poles. It's crazy. But copper is going to be huge. And Mary, I think, is a wonderful company. What I like about them is they're still small enough that you can get in closer to ground level than a lot of companies. But I think Mary's going to do some big stuff. Cowboy, sad how we sell our resources to offshore instead of home development. Well, I'm hoping to see that we do a bit of both. I would like to, we've got enough resources that we can sell it and we can use it. So I'm hoping to see both. And I know that you're not a Carney fan, but one of the things too that this One Canada bill was sort of stressing is that we want to be using Canadian materials. So that would include a lot of these resources. So I want to see that. And like I said, I right now with the first batch that were announced, I'm not super happy because a lot of them were already kind of going to happen anyway. I am looking forward to seeing what the next batch are. SPMO ETF in the U.S. market. Thought great it was. It also has Tesla, but Blossom was wrong. The fund gets reconstitution every 6 months based on August qualifying date. Missed Tesla spike and got booted. Okay, interesting. And Blossom being wrong. Blossom's wrong sometimes for sure. Rory says, Cowboy, I don't mind selling our LNG at good prices. Should we build more LNG plants? That's a good question, right? Obviously, we're expanding the Kitimat one with, it's one of the ones that are on that list to get fast track so that they can double their export capacity. Paul says, they're more stacked ETF lays, stacked 100% Nvidia and 100% AMD ETF. Okay. Interesting. Jackie, what is your favorite uranium ETF? Thanks. That's a really good question. That's a good question. There's a couple of answers here. Let's see. Whoops. All right, so this is one company that I do like. It's small. It's actually a royalty company. So it's a uranium royalty company, URC. And if you look at them in the last year, they, you know, yeah, they did come down a bit, but they are now building as uranium has become a lot more popular. So they're really, really good. So I like these as a royalty company, very low underhead. Hura, Hura. This here is another good one. So this is the Global X Uranium Index ETF. So you can't go wrong with Global X. And pull up their 1 year, and you'll see. You notice that's the same shape that the royalty one did, and you're going to see that. So this is another one I think that is really good. And of course, if you're looking for that income, the HHIC at least has some uranium in it, and there is, of course, that enhanced uranium one that we were talking about earlier as well. But if you're looking for the growth, I think either with Hura, if you want straight up ETF, or if you're looking for the royalties, I think the that one as well. So what was that? URC. There we go. URC, uranium royalty, and like I said, on the 1 year. Let me just pull this up. There we go. Same shape, same shape. They're both doing the exact same thing. But I think we're almost at that point that if it's a Canadian uranium ETF and we put them on a dartboard, you're going to hit profits as long as you hit the board. All right. And Tim was mentioning Hura as well. Yeah, exactly. Let's see. The previous was chips being Lay's. Coming soon nuts. STKD, 100% Tesla and 100% strategy ETF. Okay. There we go. Let's see, exactly because we can't get plants built. I would still like to see more. I would like to see more stuff built. Not just natural gas. I'd like to see us processing our own oil. So I would like to see when the current government says we need infrastructure, yeah, but I think that they need to say we need infrastructure. Holy banana bread, do we ever? I think we need a lot of infrastructure, and I'd like to see the more the merrier, the more the merrier. I know, it kind of goes against some of the climate goals, but at the same time, there are carbon capture programs. There's lots of ways to sort of mitigate that for sure. So that's what I would say. That's what I would say for sure. All right, guys. So we're at 2.5 hours. I don't think we're going to go 3 hours today. I think we're there. I think we're there. It's another fantastic show. We will be back again on Wednesday for our market close. We'll do this again next week. Keep in mind the weekend of Thanksgiving, there will not be a show. Holy banana bread. My mom will be in town, and trust me, you guys will have a better time. No, I'll have a good time. My mom's awesome. So we will see you guys again soon. Until then, guys, enjoy the rest of your day. This has been a fantastic show, and goodbye, everyone. Have a great week, and let's hope everything is green. See you guys on Wednesday. Bye.